Start recording. All right. Good afternoon, everyone. Thank you all for coming today. Hopefully, we'll have a pretty good meeting today. I have a lot of things that I want to cover, but not one thing in particular. Like normally, I have one focus. Like next week, the focus is going to be picking things to use to monitor for options. Is what next week's meeting is going to be about. But today's meeting, I just really wanted to go over everything that we've done so far and get right into it. All right, so let me get rid of that because that's not part of what we do. Um, and we'll just look at what we have. All right, now let me start right out by saying this part. If you have not taken a free trial with us, go here to tvtrades.com. It's easier to do it from TV Trades than Target View Trades. Just go to tvtrades.com. There's all these little things all over it right here. Just click on one of those. You can bring it down to the bottom. It's a 3-day trial. All right, 3-day trial, and that begins from the moment that I enable your indicators for you is when it begins. All right. Um, Once the trial is over with, it's $25 a week. If you want to, if you want to just try it out for a week, it's $25 a week. If you want to try it for a month and stick to it, it's $90 a month. If you want to do it for a year, it's $9.97 a year. Most people are doing the monthly right now. A lot of people start out with the weekly just to see what it's about. They pay the $25. They get the 3 free days, then they pay another $25 and get a week, and then they say, okay, well, I see it's worth it, and they go to the monthly, and that's what most people are doing. We do have a bunch of people that are going from the monthly to the annual because this is the best deal. This is like 23% off of the weekly price. This is 10% off of the weekly price. Blah blah blah. That's my sales pitch. I suck at sales. Anyway, that's the deal. Um, if you have not um, if you don't have TradingView, that's what it is. If you don't have TradingView, that's what I'm getting to. All right, then go here to targetviewtrades.com. Targetviewtrades.com. Okay. This is TV Trades. Go to targetviewtrades.com. That's this one, targetviewtrades.com. All right, if you don't have TradingView, just click on Getting Charts right here. All right, or you can click on Setup, either one. But if you don't have TradingView at all, you need to have TradingView, right? You can't use this stuff without TradingView. Click on Getting Charts. It's going to bring you right here. It says TradingView Charts. Click on that. It's going to bring you off that web page to their web page. On this page, click Monthly. The Essential is fine to start out with. You can do the free version if you want to, but the free version is gonna give you like one alert. It's gonna give you 2 monitors, 1 market. Um, you're gonna be very limited with the free version. You can do the free version. You can use our stuff because you only need two indicators and well 2 things anyway to put on the chart. So you can do the free version if you want to. But the essential is $14.95 a month, and that's after the 30-day trial. There's a 30-day free trial, so you need to do something to get a login ID for TradingView. Okay, once you get that login ID, you need to give that to me. Now, if you are going to do futures, and a lot of you guys do futures, I'm not going to talk too much about futures today. I don't think. I don't know. We'll see what you guys lead me to. But if you do futures, then you need to get real-time data for the futures. That is $7 a month. All right, you got to sign up for that. Now, to do that, if you go here to targetviewtrades.com and you go to the setup page right here, watch this video. This video. Within the first 2 minutes, it tells you how to do this, right? From the setup page, how to get the real-time data. You click on that, it's gonna tell you how to do it, but I'll just show you. In here, once you get your ID, once you have your ID established, then go in here, click on this, whatever yours is. This is my ID. TV Trades is my ID. You're going to have to go to Account and Billing. Click on that. Hang on, let me just save this really quick. I'm not sure I really want to look at that, but go here and go to TV Trades and go to Account and Billing. And in here, you need one thing for futures data. This one, right here. All right, it's $7 a month, plus tax, depending on what state you live in. But it's $7 a month. You need to get that for real-time futures data. Okay, you got to get that if you're going to trade futures. I mean, if you just want to try it out and see what it looks like, when the market's closed or whatever, you can do that. But you can't trade real-time money without real-time data. And believe me, I'm saying this because people have come to me after, looking at it for a month and saying, my stuff just doesn't seem to match up. Everything's going completely wrong. That's because they were using delayed data. All right. So, questions. Does anybody have any questions at this point? Because now's when I can get into stuff. All right. I want to see who all is in here because, I know a lot of people have been to all these meetings. For those of you guys who don't know, I do these meetings every Wednesday. And, and it's so that everybody knows how to use things and give you an opportunity to interact with me directly and ask questions right now so I can answer things for you in real time. Okay. Now, this is the MCLX. That's the micro crude oil. I don't normally trade crude, but I did last night, and it didn't work out for me last night. I was up 48 ticks, I think, at one point, but I was going for 300, and I didn't take profit it was 3 o'clock in the morning. Anyway, that's my problem. I did have a good day today with my regular trading, but I want to go over some stuff. Like, let's just look at Tesla. Okay, Tesla's been a pretty good trading market lately, and this is on a 19 range. Now, I'm not going to do a 19 range. I'm going to do a 50 range. Okay. Now, I choose range bars because you get more information out of a range bar. All right. Yes. Oh, good. Wayne says he loves these meetings. Good. I choose range bars because you get more information from a range bar than you do any other type of bar. Now, let me explain that to you. Okay. Let me explain that. There is something. I don't know. Did I go into the last meeting? Did I go into Gravestone dojis and Dragonfly dojis? Did I go into bar types and patterns or anything like that in the last meeting? And you guys remember? I don't think I did. Right? I know I do so many meetings. I just don't remember if I went into that with you guys or not. All right. Because there's something that I have to say that I didn't in the past when I've gone through the different types of bar types. There's something that I don't think that I've been articulating clearly that is good to know for you guys. So let's get right into it. All right. Now there's a bunch of different bar types. Okay. You guys know, a lot of you guys probably don't know what a range bar is, or you didn't know until you met me. You didn't know what a range bar was, and you weren't really interested in it. You probably heard momentum bars, the inline break bars. Most people are looking at the minute bars, right? The 5 minute, 1 minute, 2 minute, 3 minute, whatever. That's what most people are used to using. Some people are used to using volume bars, contract bars, and some people are used to using tick bars, the transaction bars. Okay, I would say the majority of the people use time-based bars. And those are not bad bars because you get some pretty good information out of those bars. The worst bars, the ones that you get, they're not horrible bars. But the ones you get the least amount of information out of are the volume or contract bars and the transaction bars. Now you get a different type of information out of it, but still you don't get useful, actionable information out of it. Okay, you get unless you wait until something hits a certain number of contracts. Like, you're not gonna buy Tesla until Tesla trades a million shares. Then you have useful information come out of a volume bar. But that's not really the way volume bars are used. Okay, that's a good question, Wayne. How do I select the proper range? Wait till it's the range bars, and I'll tell you. Okay. So let me start out with the different types of bars. All right, let me just go through this stuff with you. Now I'm going to take out a different charting platform here, just because it's easier for me to use. I kind of had to reboot my computer. I want to make sure I get the right chart. I think it's this one. Yeah, it switches to a daily today at some point. Okay, so when you're looking at this, right, you're looking at this, and let me put a new tab on and just take all the indicators off. Okay, let's do. Oops, I want to do add chart. I'll do a new window. Here, we'll do that. Let's do these have to be futures, so let's just do an NQ window. All right, it's supposed to catch up here and say NQ. Not responding, of course. There we go, NQZ, perfect. All right, that's gonna be a new window with no indicators on it. Now bring it over, here we go. All right, let me minimize this a little bit, that's way too big. Here we go. All right, so daily bar, that's a time-based bar. Okay, now the ones I was talking about were in here. If you go to custom like this, there's a time-based bar. These are your daily, your second, minute, hour, week, day, month, whatever. The tick bar, that's a lot of people have probably heard of tick bars and the transaction bars. And one of the, the common ones are Fibonacci numbers, like a 144 or 233 or 377, something like that. Those kind of tick bars are what people commonly use. Okay, and what that means, if I do it, like this is the NQ, right? The NQ doesn't have a ton of volume, so we'll do a 144. Okay, so what that means is every single bar that you see in here has 144 transactions in it. Okay, and you'll see up here, it's not up there right now. Let me turn that thing on. There's a countdown timer. Here it is right here. Okay, you see this number up here. When that number gets to 0, hang on, there's another thing I gotta do. View right margin. Okay, now we can slide it over like this. All right, when this number gets down to 0, it's gonna go to another bar. Right, that means you've had 144 transactions, and it's gonna go to another bar. Now, I chose 144 just because of the Fibonacci number. Let me just choose a number that's like 200 there. Okay, so every bar has 200 transactions. Now, those transactions represent different things, right? Different number of contracts, different prices. There's 200 transactions. You have no idea where the bar is going to end. You don't know if it's going to be an up close, a down close. You don't know if it's going to close at the top or at the bottom. You don't know where it's going to close. All you know is that it opened right here, and when that number gets down to 0, you're going to have another bar. That's what you know about those bars, right? The one good thing about these bars, well, let me get to the volume bars first, and I'll tell you, because the one good thing about those two types of bars is the same thing. But let's go and look at those bars now, okay? So this is a transaction bar, and so you know very little about the bar, right? You know where it opened. And once it closes, you know where it closed. You don't know if it's going to close at the very top. You don't know if it's going to close at the very bottom. You don't know anything about the bar except where it opened, and that when this number gets to 0, it's going to be another bar. Right? You see how most bars have wicks at the top and the bottom? A wick means price went up to here, it failed there, and it moved down to the bottom. Hang on, let me shut off those tooltips. Those things drive me nuts. They're right here, tooltips. So that's what you know about those bars. All right. So let's go and look at a different kind of bar right now. All right. We'll look at a volume-based bar. Now this is a contract bar, right? And we'll do 200 again. So in this one, every 200 contracts, you're going to get another bar. Okay. Again, you don't know where the top's going to be. You don't know where the bottom's going to be. You don't know if it's going to be an up close or a down close. You don't know if it's going to close at the very top or if it's going to close at the very bottom. Now let me say those things again slower, because it's important that you understand that. You have no idea where the top of this bar is going to be. It could be all the way up here. It could be right here where it is. All right, you don't know where the bottom's going to be. It could be right here where it is. Or it could be all the way down here. You don't know where the close is going to be. It could be right here at the very bottom. It could be right here at the very top. It could be up here. It could be right in the middle. You have no idea where the close is going to be. All right, all you know about the bar is where it opened, which is right here. And when this number gets down to 0, it's going to be a new bar. That's all you know. You don't know all those other things about the bar, right? You just know those couple of little things. Where it opened, and when that gets to 0, it's going to be another bar. So you know very little about the contract bars and very little about transaction bars, right? Okay. Now, I don't mean to just completely diss on them. Let me give you one good thing that you do know about these, because this is something that I usually forget to go over. The one good thing that you do know about these is if this number goes down to 0 and it closes at the top or the bottom of the top or the bottom of the bar, the very top or the very bottom of the bar. Like this one right here, closed at the very bottom of the bar. All right. If it closes at the very top or the very bottom of the bar, that usually gives you an indication that price has got a lot of momentum in the direction that it closed. All right. And the next bar is usually going to continue in that direction for some period. That's one good thing about these bars. That's pretty much the only good thing about these bars. So when it comes to a Dragonfly Doji or a Gravestone Doji, these bars give you good indications. Okay. Now we don't have too many of those. They don't happen all that often. But this is just about a Dragonfly Doji, and they usually happen at the bottom of a trend, and a Gravestone Doji usually happens at the top of a trend. I don't see any in here right now. If I put it on a smaller time frame, you might find some. If I put it down to like a 50 contract, then we might find some in here. I'm not going to spend too much time looking for it. I'll just draw you a picture and you'll understand. Here's one right here. This right here, this bar right here is called a Dragonfly Doji. If it happens like this, it usually means that you're going to get a move up after it, okay? Immediately after it. Because price tried to go down and there were sellers down here. So it opened here and it closed here and it had momentum right here. As it closed here, as this bar ran out of contracts, there were people buying it right up to the point that it opened. So it usually means you're going to have momentum that flows right into the next bar. Okay. And if it happens at the top, these aren't really Gravestone Dojis. Those are just regular Dojis, but not spinning tops. But if it happens at the top, this one right here, this little guy right here is one, but this bigger one right here is pretty close to being one. If it opens at the bottom and closes at the bottom, and it goes up like that and closes at the bottom, that is a Gravestone Doji. Usually that means that the momentum is running down. When that bar hits zero, the momentum is running down. It's usually going to flow right in and move back down with it. All right, so those are the only two really good things about those bars. Now, and let me draw a picture for you so you can see. I know I had done this before. Let me draw a picture for you. Not on this chart, but I'll draw it on this chart. Okay, so you can see what I mean. This is a Gravestone Doji. And this is a Dragonfly Doji, where it opens here and it closes at the same place, but it runs down and comes back up. It opens here and it closes at the same place, but it runs up and finds sellers up there and pushes it right back down. Those are those two kinds of dojis. All right, those are the only good things really about the contract and the and the transaction bars. Those two dojis are more meaningful. Okay. Now, let me get into the other ones. All right, I don't want to bore you guys with all this bar stuff. Let's go over quickly the other kinds of bars. Let's jump into a 5-minute bar. Okay. Now, the thing you know about this 5-minute bar, you know a little bit more about it than the other bars. Why? Because it's got a time element associated with it. Those other bars don't have any time element associated. This has got a time element associated, so you know where the bar opened. Again, you don't know when it's going to close, where it's going to close. You don't know where the top's going to be. You don't know where the bottom's going to be. If it's going to be an up close or down close. If it's going to close all the way at the top or all the way at the bottom. You don't know any of that, but you do have a time element. You know when it's going to close. All right, so you can almost be proactive. When it gets close to the time that it's going to get down to the next bar, you can almost be proactive and get ready and put an order on it if it meets the criteria for for you to place an order. You can almost be proactive there and put an order on. All right, almost. Now, the Dragonfly Dojis and the Gravestone Dojis aren't as meaningful with this bar because this just has to run out of time. This doesn't have any momentum going to the top or the bottom to get to the next bar. It's just got to run out of time. So if it closes at the bottom and if it's down here at the bottom and it runs out of time, it's just going to run into the next bar and then it's just going to, do whatever it's doing. There's nothing really saying that it's got momentum if it closes at the bottom of the bar. It only closed at the bottom of the bar because it ran out of time. All right, it didn't have any momentum. It wasn't selling it wasn't selling all the contracts off. It wasn't selling all the transactions off. It just plain ran out of time. So the one benefit you have is that it's time based, so you know when it's going to close. You don't have any idea when you got a whole bunch of momentum. Now you see a big bar like this, and that shows like it's got a whole bunch of momentum in it, but that could go up and down a whole bunch in there. In that one bar right there, you could have a whole bunch of moves up and down. Like something like this one over here. A huge bar like that in a small time frame, there could be a ton of movement in that one bar. I mean, that bar, it's what's a 5 minute bar? In 5 minutes time right there, it went from 352, we'll say 352 or 53, all the way down to 302. So it went 50 points, we'll say. 50 points of movement right there. Now when we get to the range bar, if we look at that same bar, let's mark this spot. Okay. If we look at that same bar from beginning to end, and that beginning was it's 9:30 and ended at 9:35. Right. We'll go look at that in a minute. But so you understand, with the time-based bar, all you have is the open and the time element. That's what you know about it. Nothing else is very meaningful. Okay. Then we get to the range bars, and this is why I use range bars all the time. Because with the range bar, you lose the time element. Now this is the NQ, so let's just go with a 50 range. Okay. You lose the time element, right? You don't know when the bar is going to close, but you do know that every bar has to close either at the top or the bottom to get to the next bar. So this is true price action, all right? If it closes at the top, well, there's a good chance you're in a movement that's going to be pushing price up. If it closes at the top, you know ahead of time where the top's going to be because you know where the bottom is. You determine how big the bar is going to be. I just said these are going to be 50 ticks. So if I know where the top is, I know the bottom's going to be 50 ticks away from it, right? Makes sense, right? So with the range bar, you know where the top or the bottom. If you know where one end is, you know where the other's going to be. It's got to close at the top or the bottom. So you know it's either going to be an up close or it's going to be a down close. You know ahead of time if a down close is going to satisfy the rules or the criteria for you to have a trade. You know ahead of time that that's going to happen. So you can be proactive with your orders. That's why I use range bars. And I'm getting into this because the alerts tell you, next up close or next down close. And they're made for range bars. All right, that's why you see the range trigger and you see the range sniper. They're made for range bars because you have more information from range bars. So you can be proactive with your orders and you can get your stuff on ahead of time. So you're not behind the ball ever. You know ahead of time what's going on. Now getting used to it and being quick enough to do it all is, that's just going to take time. But you know so much about this bar, right? I know the top is right here. If the top is right here at 56, I know the bottom is going to be at 06, right? Bottom's going to be at 06. What's the low of the bar right now? 46. It's got to be 50 ticks. Sorry, 50 ticks. Let's do something in a multiple of 4 instead of 50 ticks. It's going to be a multiple of 4 minus 1 is what I want to do. Let's do, instead of a 50 tick bar, let's do a 31 tick bar. Okay, that's what I use in the morning anyway. A 31 tick bar. So I know it's 8 points from the top or bottom is where I want to have my order, right? Let me make this stuff a little bigger over here on the side. Axis font. I think it's right here. I think it's this one. There it is. Okay, so over here, this bar right here, the high of this bar is 45.3. What is this, the NQ? Okay, it's 45 and a quarter. So we'll say the low of the bar is going to be 8 points below that. What I would sell on a down close, if I were looking for a down close to satisfy a trade setup, I would sell 8 points below the top of the bar. All right, so I'd be selling 37, right? That's 7 points. 37. I'd be selling 37. That's 8 points below. All right, so now the top just moved up to 46. So I'd be selling 38 if I were looking for a down close to satisfy the trade setup. If the trade setup was it has to close below that level. I have to have a down close below that level. I would say, okay, the high of this is 46, subtract 8. So I'd be selling 38. All right, I'd have a sell stop limit placed ahead of time down there. So you know ahead of time exactly where to put your order. Okay, I do this every day, all day in the morning session. All day. I do my 2 hours every day in the morning session when I'm trading with everybody. And I'm proactive with my orders all the time. You know, when I'm rattling off trades in the morning, I'm doing the math in my head. Okay, I'm doing the math in my head so that everybody can do it. We actually have something, Schwab. I got NinjaTrader installed on this machine, so I could show you that thing that I was talking to you about before. I don't have it ready to distribute completely yet, but I can show it to you. Let me open up NinjaTrader and I'll show you once it opens up. Ninja's gonna take a minute to open, but I'll show you what I mean. And all this stuff that I'm telling you about range bars will make a lot more sense to you. Or if it doesn't make sense to you already, it should make sense to you. All right, now I tell you all that because the stuff that we use in here, you know, we use the range sniper. And the reason we use the range sniper is because I'm not sure this is the range sniper we want to use. Let me get the one from in here. That's one that I was working on, I think. We use this one. Okay. And the reason I have it, I call it the range sniper, and this is the range trigger you can actually use on any kind of bar, but the range sniper is really made for range bars. And if you try to put it on another bar, like you try to put it on a 30-minute bar, it's going to tell you over here once it loads up, this is not a range chart. Because the range sniper actually, it's counting on you. This is Tesla, and we were on 100 range, or 50 or something like that. The range sniper is counting on the bar being a range bar, right? Every bar being a close at the top or a close at the bottom. So you're not going to get triggers if you don't have the bar closing at the top when it's supposed to close at the top. It's looking for that. So the range sniper is not going to work unless you're on a range bar. Okay. The regular TV trades, that will work on any kind of bar, right? It'll work on range bars, as you can see right here. It works great on range bars, and it'll also work on a 30-minute bar, if you want to put it on a 30-minute bar. Apparently we didn't have a lot of trades here on the 30-minute bar today. But here we did. We had some shorts back here. Okay. But that's, was that today? That wasn't today. That was just last week. Okay. But this is all stuff that you need to understand. You know, the range sniper works on range bars. The range trigger actually works on all kinds of bars. It doesn't matter what kind of bar it is. And the TV trades works on any kind of bar as well. All right. Just stuff you need to understand about the software. Now, let's get into the actual tools a little bit. All right. I guess we can start with the TV trades. All right. For those of you guys who are new in here, has anybody asked any questions? Does anybody have any questions? Yeah, I'll answer your question right now, Wayne. But anybody else, do you have any questions for me right now? I am happy to answer any questions that you might have. Okay. All right. Well, one of the question that Wayne asked was, how do you choose a range bar? Okay. What makes me choose like a 50 range instead of a 5 range or a 600 range? It has to do with the price. It has to do with the price of the bar, and the fact that a range bar, when you're talking about stocks like this with Tesla, every move up and down every tick up and down is 1 penny. So a 50 range bar is a 50-cent bar. So every bar is 50 cents high. Okay, every single bar is 50 cents. And you know that information ahead of time, right? That's good to know, don't you think? Every bar is 50 cents high. And you get to choose that. That's up to you if you want it to be that high or not. But I like it to be, the bigger the range bar, the bigger the, like with Bitcoin, for instance, I like 1,000 range or maybe a 5,000 range. But with these, with a $200 stock, 150, 100 is about what I like to use for range bars. With a $100 stock, 50, maybe 25 is what I like to use for the range bars. Something over 500, you might use a 250 range bar. Okay, it all depends how volatile it is. The bigger the stock is, usually the more volatility and price movement you're going to have. And that's where the different size range bars come in. I mean, you could have $1,000 stock that has no volatility at all. It just doesn't move. And in that case, you're going to have a smaller range bar because you're going to be dealing with smaller movements. Okay. For the NQ, Joel, I use a 31 range on the NQ in the morning. That's why I was just able to rattle off that stuff about the 8-point thing. And on the ES, I use a 7 range bar. Okay. And so when you look at that, when I do it in the morning, let me hit save on this and see if I... Oh, let me just... Oops. Hang on. Go back to cross. And I don't have it up here, but if I go to the ES right now, let me just go to an ES chart. And this is an ES 10 range, but in the morning I would use the S on a 7 range, like this. Okay, now let me just undo that. I'd use the S on a 7 range like this. And if I had, let's put, I'm trying to think what I have that in. I'll put the range sniper on, but I want to show you something when I put the range sniper on. Okay. Oops, I already got one of those. Or, no, I don't, I guess. Let me put that on. All right, let me get rid of this. Get rid of that. And get rid of that. And get rid of that. All right, so we got the range sniper on here. We have the range trigger going. All right, so the range sniper on a 7 range ES. When you look at a bar like this, if I wanted to sell a down close on this bar, it's going to be 2 points from the top of the bar where I would have my sell stop limit order. Okay, 2 points from the top of the bar is where I'd have my sell stop limit order. Can I go over the diamond principle? Yeah, I can, Mark. So Tesla is a 50 range or 100 range is better in my opinion. Either one is good. Either one of those is good, Wayne. The 50 range is going to give you more opportunities. Smaller swings, but more opportunities. But like right now, for instance, we're in red right here. We have a red background, right? And so we'd be looking for price to come out of the overbought with a red background. That's what I'd be looking to sell. Those are opportunities to sell. When price comes out of the oversold, when the trigger down here comes out of the oversold with a blue background, that's when you're looking to buy, right? Comes out of the oversold with a blue background, you're looking to buy. As long as the one before it put in a higher swing, it continued the trend. Right? Don't forget about that. Every trade has to continue the trend. Every trade you get into has to continue the trend. So like this one right here, where it came out of the oversold. Let me use the other thing. This one right here, where it came out of the oversold, right down there. All right. Right here was your trigger. Right here is what it's got to go up above to be able to take the next one. When it comes out of the oversold again, to be able to take that one, it's got to get up above right there. Continue the trend, right? That. It's got to get up above there, which it did, all the way up here. Then it pulled back down, and where to come out of the oversold? Right there. There's your entry right there. Where do you expect it to go? At least up to there. It's got to go up to there to be able to take the next one. The next one comes out of the oversold, comes down here, goes up here. Did not get up there, right? It did not make it. You don't trade anymore after this one. Does that make sense? That's the way that you should trade. That's the way that everybody should trade. When you're trading with the trend, if you're trading with the trend, then that's exactly what you want to do. You want to make sure you have a trend. And if this does not exceed that, you don't have a trend. As a matter of fact, if you ever come in and you just sit down and you see this popped out of the oversold like that, and let's say you were coming over here to this one right here. You say this popped out of the oversold, right? Hang on, let me do this way. Slide it over here like this, and you say you come in, and right here you sit down, and this is what you see right down here, right? This is all you know. Price is coming out of the oversold. You have to look left to the last time that it came out of the oversold. All right. Did you put in a higher swing from the last time it came out of the oversold? Did you continue the trend with that last move up? If you did, then you can take that. If you didn't, you can't take that. Does that make sense? Every trade that you take to be with the trend, it has to be in a trend. Okay? It's a big deal. It really is. If you're trading all the stuff that I do is with the trend. I don't do anything counter trend. I mean, I have created counter trend things, but that's too hard to getting people to go with the flow and to go with the trend is so much easier than getting people to say, okay, well, it's going down right now. Why would I want to buy? You know, it's so much easier when they say, okay, well, it's going up. Let's buy. And the indicators are here to give you, right near the pivot, the point where it starts to go up or it starts to go down. That's what the tool is here to help you with, is to give you that information so you can get in there right at the right time and make a good decision and start making money right away. All right. So for anybody that's in here for the first time, the whole idea behind this is to just be able to sit down and, just sit down and go like this. Just go to indicators, invite only, put your range sniper on, and bam, suddenly you have trades. You don't have to change anything. You don't have to think about anything. You have trades. All right. The stuff that I'm telling you is just ways if you want to trade. If you want to trade a bunch of times during the day, if you want to take a bunch of trades, then you have to make sure that you're continuing to trade with the trend. All right. When the trend ends, you don't want to trade anymore. You don't want to trade in that direction anyway. Okay, because that's when it stops you out. And nobody likes getting stopped out. Right? If you came out of the oversold the last time, but with a blue background, and made a higher swing, then yeah, you would go long. If you came out of the oversold, like right in here, right now. Okay, now you see this the red bar that's on a blue background right there? When that happens, when that bar closes, if you had the alerts turned on, you're going to get an alert that says there's going to be a short coming soon. All right. Now, it may happen right in the middle of it like this, and it may not actually give you the short, but it's going to let you know that it's just about at the edge of changing direction. All right, getting it color change in the background. That's what it's letting you know. That's what this is letting you know right here. But that's okay. It doesn't mean don't take any trade. I mean, it doesn't say don't do anything. But like the very next thing right here, if you sat down like this right now, see this last one right here. This is a good example. This last one right here, it came out of the oversold, but look, it didn't put in a higher swing, right? This one did not put in a higher swing. So right here, where it's coming out of the oversold, if you sat down just like I am right now, I'm just looking at this right now, where the charts just happened to end. I'm looking at this right now and I'm saying, okay, well, the last one did not put in a higher swing where it came out of the oversold. It went enough to give you some profit, maybe get your stop to break even. But when you came out of the oversold, the next time here where it's coming out of the oversold, you don't have a higher swing. You don't have a trend. So you're not going to take this. All right. Now, I don't know what exactly happens on the next bar. Okay. It does turn to red. And right in here, it's, first of all, you're not going to go long on a red background. And second, right here, you're going to be looking for it to short where it's coming out of the overbought. Now you're in the red background. You're overbought. You're going to be looking for it to go down, right? That's what you're going to be looking for right here. And so you have a blue one right there. So that blue one is going to give you an alert that says, you might be going to long soon. So you're not going to do anything right now until, if you get a down close on the next bar, if the down close pulls you out of the overbought and you're still in the red background, that'd still be a trade. Okay? But it's not. It's a blue one. So now you're not doing anything because what do you have to get? A higher swing, right? You're not in a trend yet. Okay. So you're still not doing anything through here. Not doing anything. Not doing anything. And there you go. I think you got just a tiny bit higher swing right there. Let me see if I can do it from here. I'm trying to do it so I don't see the next thing. I think you get just like one tick higher swing right there. The high of that bar, I don't have the highs on, but it looks like you got one tick higher swing right there. So you could consider taking a trade here on the next one, right? And here, it comes out of the oversold right there. And you get the trigger right there that says go long. So you take that, all right? Puts in a higher swing again. You get your next one. Comes out of the oversold. You get your trigger. You go long again. Take a whole bunch of profit. You're waiting for the next one. Waiting for the next one. And here it is. You get your trigger again. You go long. Puts in a higher swing again. Just a little bit higher swing. So right here, you see it loses momentum right here. This leg length right here is less than that leg length. So it loses momentum right there. So the next one is a little suspect. A little sus. That's why the kids hate hearing me say that. Dad, you're not allowed to say that. All right, so the next one does happen. And on this next one right here, It does happen, but it doesn't put in a higher swing, remember? So you stop trading in that direction. So starting from over here, all the pieces came together just right. Right? All makes sense, doesn't it? And this is with the ES, but with the NQ, you would be doing the same thing. With anything, you're going to be doing the same thing. Okay? So in 3 long trades, no, you'd be, from all of this right here, you could be in just one from here if you wrote it out all the way up. You could be in just one. Or if you took profit, you could enter again. If you took profit, you could enter again. If you took profit, you could enter again. If you took profit, you wouldn't enter again. Okay? But if you're on a larger time frame, that's when you might be in just one long trade. On a smaller time frame like this, where it keeps going up and down and coming out of the oversold in here, those are just opportunities for you to enter and then re-enter with precision. That's what the screenshot says, I think, isn't it? This one. Enter with precision and then re-enter with confidence. Made that myself. Actually, this I had to buy, but the rest of it was my idea. Again, why the last trigger is sus. This one right here. Okay, because this leg length, let me show you this. Let me draw it for you a different way. Okay. The way the markets always work, right? They go up. Oh, I'm going to do it with a different one. Let me do it with the thick one. It's easier for you guys to see. The markets always work the same way, right? They go up, and then they pull back. And these are measured moves, right? They go up, and then they pull back. And then they go up, and then they pull back. You see how long these legs up are? From here to here, and from here to here. And you see how long these pullbacks are? From here to here, and from here to here. And then they go up. See how long that one is compared to that one and that one? And then they pull back. See how deep that pullback is? All the way to the prior swing low, where this one only went halfway, this one only went halfway. That's the way that the markets work all the time. Okay, and then when the trend weakens, it stops putting in the higher swing. It doesn't exceed the prior swing high, and then it starts to exceed the prior swing low. Or it may exceed the prior swing high like that and exceed the prior swing low. Either way, you're not going to trade anything after that. Okay? If it goes up this far and it pulls back this far, you're not going to want to trade it. If it goes up this far, it doesn't go far enough, so any pullback you're not going to want to trade. Right? You got to wait until you're with the trend. With the trend. Does that answer it for you, Joel? And so what happened over here? Let me get this thing back. What happened over here is we were with the trend. We had a nice long trend right here, this big leg. Then we had this pullback, and then we had just this little tiny leg right here. And then this pullback was bigger than this pullback. All right. So what I was just saying about this over here, when I drew that for you, we had, this is really the whole leg up right here, from there to there, right? And then we had our pullback. The next leg started there and went all the way up to here. So we had a lot of momentum right there with that big leg up. And then the pullback was short. Now a short pullback is good if you have a lot of momentum. A short pullback is good if it's followed by a leg the same size as the one you just came off of. Right? This big of a move. If we had that right there, then a short pullback is good. But if we don't have a leg like that, if you have just a little tiny leg like this on the push up off the short pullback, and that says you're at the end of it right here. Or you're potentially at the end of it right here. Okay? That's what that says. There's nothing here. There's nothing pushing it up anymore. They're selling it off. And then if it exceeds that swing low, which it just barely did right here, but if it exceeds that swing low and this pullback is deeper than this pullback, then that says you're either going to be in some chop or you're going to have a direction change. Okay? That's why this one was sus. Because this leg up here was so small compared to this leg. And then the pullback was deep compared to that one. That's why this was sus. And this, now this is something this is something I went over today. This is 50% retracement, but it's going the wrong way. Now, when I drew that stuff over here and I said these were measured lengths, they are. I mean, to a degree. You know, there's nothing that says it's going to be exactly this, but the way that the market usually works is like this right here. Here's an example. Here's an example. This was because of this long leg right here. This didn't do a 50% retracement, but most of the time you're going to see something like this. You see, this was the move up right here. Let's say this is our move up, and let me show you. This is our move up right here. Sorry, I'm using the wrong thing. Hang on, let me just get rid of that. I didn't mean to use that. I meant to use this. This is, did I do the same thing again? I did. I did the wrong thing again. Why do I keep doing this? Fib retracement. Why is it looking just so weird? I think I'm on, this chart is just strange. Okay, well it'll work. I'll still use it, but this is the move up, okay? Oops. This is the move up right here. Like this. We'll do a fib retracement. This is our move up. It's got different colors. That's the problem. Okay, from there to there. So this green one right here is a 50% fib retracement. All right. Now you expect that you're going to get 50% retracement. That's what I like to see, a 50% retracement. If you go to the next move, that to there is the move up, and this green one right here is a 50% retracement. So you got a 50% retracement. All right. That's what happens when I drew this over here. That's what I was talking about. Okay. So if it goes up, it retraces 50%. That's great. I like to see it bounce off of something right there. If you have an indicator right there, you know, some sort of thing of support to bounce off of right there. That's what you don't see behind all this. You don't see the indicators that are actually, that I created, that actually run in the background. You don't see that stuff because that makes you guys second guess things, right? But if you could see my mouse, hang on. You don't know where I am. You can't see my mouse, Michael? My mouse is where the cursor is. You see the big cursor right there? The black cursor? That's where my mouse is. Okay, all the cursor moving around. If I go slow and I get over the finger right there, that's my cursor. Okay. But that's why up here where it didn't continue the leg up there, you know, and the pullback was deep, that made this one potential beginning of trouble, or potential beginning of chop, or a trend change. And you see it did actually not go up, it turned down, and it went sideways for a little bit. Now I don't know what happens as it gets out of this miss. If we keep going, no, well that's it to the miss right there. It just went right here to the end. So it's going to end in this miss right here. Now I don't know how it's gonna take up after, you know, if the markets open back up. There's still another hour and a quarter left of the markets, but it looks like it's not really going to give us anything to work with. But but that's the way that the markets work, and they work that way all the time. So the idea, the TV trades range trigger is to get you in at the pivots, right? And I know I said and I'm just going back. I want to make sure I answered all the questions because this is taking a lot of time. I didn't get to show you all the cool stuff that's going to lead into next week's stuff. But the TV trades range trigger, the bigger the time frame, and this goes to what you were saying, Wayne. You know, the bigger the time frame, the more likely the TV trades range trigger when it comes out of the overbought, the oversold is going to be the pivot. Okay, when it comes out of the overbought, the oversold is going to be on a pivot bar. All right, now for the ES, a 50 range on the ES is a lot, but when it comes out of the oversold, it's more likely going to be the pivot. You stop when you get into something like this. When you look at something like this, your stop line needs to be a little beyond the bar that got you into the trade because it should be the pivot bar. If it's not the pivot bar, then it's going to go completely the opposite direction. Okay, it should be the pivot bar. It should keep going in the direction you came from. Okay, every time. And if it doesn't do that every time, then you know your risk is going to be as big as the bar that you're in plus a little bit. Now 50 is a lot for the ES, but if you do this on anything else, let's do the NQ. for instance. And with the NQ, we'll put on the Z contract and we'll do 100 range on the NQ. Okay. Every time you get to a pivot, it comes out of the overbought, the oversold. When you're in the right color, it should be a pivot bar. Okay. When you're in the overbought, the oversold, and you're in the right color, it should be a pivot bar. Now these are 100 range bars, guys, 100 range bars. And remember, if this one doesn't put in a lower swing, you're not doing anything after it. Okay. This one right here, put in the lower swing. It was the pivot bar, put in the lower swing. You get that big move down. This one right here stopped you out. You don't do anything else. This one right here, you didn't get a signal on this, but it came out of the oversold right here in the blue. That worked out just fine. This one right here came out of the oversold in the blue. That was the pivot bar. That was the pivot bar. This one did not put in a higher swing, so you skip that, right? You see how it works? The TV trades range trigger can be used pretty much all by itself. And let me just go up here. There's some more questions that came in. Okay. Wayne, you gotta, am I gonna add something to the indicator to not take the last entry? I'm not sure what you mean by that. Am I going to add something to let you know that you're coming off a higher swing or a lower swing? Is that what you mean? I think that's what you mean, right, Shahab? Yeah, no. I mean, I want to. I want to. But it's... well... you don't know until the bar that you're in, or the bar after the bar that you're in, closes. You don't know whether you're at the pivot or not. So you don't know whether you're on a swing high or a swing low. I do have things that look back and show the pivots and stuff like that, and that's where we get the targets from. But having to look back to see if you're coming off a swing high or a swing low, there's too much ambiguity in that. It's something you have to do with your eyes, really. You have to do with your eyes, and you have to say, okay, this is the swing high. Because this one right here would look back to here, or it might look back to here, and say, well, this is the swing high. Because it doesn't know you took this trade right here. It didn't know it triggered a trade right here. It's something that I've thought about. I've given a lot of thought to that. Really, I have given a lot of thought to that. Right? And yeah, it'd be difficult because there's so much ambiguity in it, and there's so many moving pieces that it'd be really hard to do that. All right. Well, I didn't get into all the stuff that I wanted to get into. I didn't get into any of the stuff I wanted to get into, really. But I did get to show you a bunch of things. It's been more about trading education than using the tool. But that's okay. I don't know. Do you guys feel like you got something out of it? Everybody stayed in here. So everybody that came is still here. For the most part. I think one person left. But the reason we have the tool is so you don't really have to think all that hard about it. You know, when you see a trade trigger, like in here, when you get this kind of thing going on in here, this is your original indication, right? If it doesn't work out, don't take that one, don't take that one, don't take that one, because you didn't get a lower swing. It didn't continue the trend, right? You're not interested in anything after that. If it's not continuing the trend, then it doesn't matter that the background's red. The background might as well be, white or blue. If this one doesn't work out, then just stop looking in that direction, right? Over here, this one did okay. It pulled all the way back up to here, but your stops could be a little bit above that, and so you were in there. That would have been rough, but you're in there, and it ran down 500 ticks or something like that, didn't it? 364 all the way down to 265, almost 100 points, 400 ticks almost. So, it's it's a good thing. And that's what you look for. And I'm going to tell you one more thing. The idea is not to sit there and trade all day long. Now, I know a lot of people want to sit there and they want to get something that you can trade 5 times and get 5 wins every day, and and make thousands of dollars every day doing that. But that's really not the way to do it long term. That's not the way to do it. And I've been doing this, for a very long time. You know, my birthday is coming up in less than a month, and at that point, I'll have been doing it for 45 years. Well, trading for 45 years, but doing this stuff, for 20, 25, something like that. The way to last is to get in, get your money, and get out. Don't keep trading. The more you trade, the more you're at risk. All right, the more you trade, the more you're at risk. Now, I show this thing every now and then. This is what I do in the morning. This is not. I don't know what this is. This was March, it looks like. But anyway, in here, this is quitting when you get the goal for the day. Have a goal that you can achieve every day and quit when you get the goal for the day. All right. The idea is to add contracts. Add contracts, trade less. Trade less, trade higher probability trades, fewer times with more contracts. Get in, get out, get your money, and go away. That's what you want to do. Well, I've done all that, Wayne. But it can be done. You just have to find something that you can do every day, something that is consistently profitable, something that suits you. Like, earlier Joel had asked about two markets, right? He asked about the NQ and the ES. Now, those must be markets that he likes. So, those are markets he's comfortable with. Those are markets he's willing to take the risk on. Those are markets that he has a feel for when it starts to move or when it doesn't start to move. You got to be comfortable with the market that you're in. Usually people identify with the market after a while. They find one market that really suits them well. And the good thing about what we have is you can use it on any kind of market. And the range bars work on every kind of market. You can do this on Bitcoin. You can do it on, like I was showing you, Tesla earlier. You can do it on anything that you want to do it on. All right. And if you need help, like determining what range bar to use for what, if you want to trade stocks, what stock you're going to use, or if you're doing crypto, what size range bar you should use for like Bitcoin or something like that. Just ask me and I'll do my best to help you out. Okay. So, yeah, I wanted to show you some things, and this is going to kind of lead into next week's meeting because I'm running out of time right now. But I just want to show you some things that happened this past week, okay? Now, I don't know why I have this drawn or that picture, but I'm just going to bring up all the pictures that I had here. Well, here, I'll use this one, this Tesla one. Okay, this is a good example. In here, I guess in the email that I sent out to some of you guys, there were some examples in there. This was one of them. Now, this right here, you don't really see it over here, but this is on a 100 range Tesla chart. So every bar is $1. And it was at the end of the day. That's what you don't see right here. At the end of the day, when this popped out of the oversold like that at the end of the day, usually by the next morning, like right now, if we were to go look at something right now, we would probably find something. Let's just look at some of these stocks. What are we on? 100 range? Let's look at Tesla really quick. Tesla, and go to the end. Come on. All right, we're coming out of the overbought. That's not the right direction. Tesla's not going to do it. Let's look at Micron coming out of the overbought. That's not going to do it. Let's look at NVIDIA. Nope. Let's see this one right here. This was the trigger right back here, 10 o'clock this morning. Let's look at come on, give me another stock. Apple. Almost right here. If you were to look at Apple tomorrow morning and it comes out of the overbought tomorrow morning, I'd be buying puts. So Apple's almost got it right here. It's almost got a trade. Uh, Apple, give me another one. Come on, I know I have some over here. Let's just go look over here. I know I have some over here. Netflix, there's one. Let's look at Netflix. There we go. Netflix is a good one. All right, so Netflix right here. Let's look at this really quick. So it's 4 o'clock. Let's just make a screen. Let me go get something. Hang on. Let me go out here to my Schwab account and get something. I'm doing this so that you guys can see another way to really think about doing this, and another way to make money with this is going to lead into next week's stuff. But let me open up this stuff here on a Schwab account. Hang on. Here we go. I mean, we could do this probably with an ETF too, but I think doing it right now with a stock is going to have more of an impact probably. Okay, so let's just look at the way this is ending right now, and we'll look at Netflix. Hang on, let me go to trade, chains, and NFLX. Now Netflix is a $700 stock, so this only being $1 is not that huge of a deal. But let's just look at options that expire. We'll go for something out next week, okay? And these are going to be puts that we're looking at. So let's just do this. We'll do puts, and we'll look at things that expire next week. We'll go with the 25th. I mean, I guess we can go with the 25th. That doesn't matter. We'll go with the 25th. We'll pay a little bit premium for that, but let me take this and snip this over here, and we'll do it like this. Netflix. Here it is. Okay. So the 25th. Now, what we have right now, is, let me minimize that. We have a down close here that's pulling out of the overbought at the close of the day at 702.19, right? Would have been your entry point. Right down here is 733, the swing low. What did I say a few minutes ago about every trade getting down to and exceeding, continuing the trend, right? It's got to go down below this to actually continue the trend. This is your leg length right here. So if you were to put this all together like this, the way it should work right now, if it's going to continue the trend, this should be a leg length. So it's giving you all this information ahead of time. This is your leg length. This is how far down it should go. You should make it all the way down there at 698. All right, that's what it should do. But at a minimum, it should get here to 700. All right, so you look here. And look at the puts. These are just the puts, and we'll go out to the 25th. The 700 puts right here, they're out of the money right now. All right, because we're up above 700, they're out of the money a little bit. The 705s, they're in the money because we're below 705. So if you grab something that's a little further out, like the 695s, because we think it's going to get down to 698. So if you want to save a little money, you would grab the 695s. It'd be a little cheaper. But let's just go with the 700s. All right, the 700s are the next one up. So we'll go with the 700s right now, and we'll mark this right here. I want to take a picture of all this. Hang on. I got to save this to actually do this. Let me save this. And we'll do NFLX 1016. Okay, we'll save that, and now go open it. Hold on. Okay, and now we'll open it. And oops, I guess I did it a couple of times. There we go. All right, let me get rid of that. So now we have Netflix 1016. And I'll slide it all the way over here like this. So what we're interested in is the time of day, the dollar value of the 700s, the range bar, where we expect price to go. All right, so there's a couple of places we expect price to go. One is, let me click on this and see if I don't have it in here. Okay, one is going to be right here. right? That's the first place we expect it to go. And then the second place is right here. That's the second place we expect it to go. Okay. Based on all the information that we have and that we know. All right, now the target information that you have right in here, that's based off of the last arrow. The last arrow was pointing up, so you're only going to have green stuff on that. If we were to get rid of, with a sniper, you can't really do it. But if we had the TV trades on right here, I'm not sure with the TV trades if we can do it. But hang on, let me just put the TV trades on and see if it does it the right way. It might be giving us a short right in here. By default, the TV trades only gives longs, but you got to turn the shorts on. So turn that on and shut that off, and it should give us some short targets. There it is right back here. Okay, so this is saying the targets at 697.7, 697.63, and 696.65. So all the targets that are given are below this right now. And that's based on prior swing highs and lows. Okay, hang on, there's some new questions. Okay, earnings tomorrow on Netflix, by the way. Okay, all right, well, it doesn't really matter. We're just going with what the charts say right here, okay? And let me bring up that picture again. Bring up that picture. I know I've gone over a little bit. I'm sorry about that. I just wanted to do this for you guys so you have it to refer to. And I'll stick it out in the, you guys know about our Telegram channel, right? I'll put this out in the Telegram channel too. Let me slide this over here, and I want to move the table over a little bit. Okay, to move that table around, you go in here, and you can move it. I'm going to move it right top. Okay, there. Now you can see all of it right here. Netflix 100 range. You have the time. You have everything in here. Now when I make a screenshot of this, I'll circle all the important things and I'll stick it out in the Telegram channel. Okay. Now, here. So let me highlight all the important things. This is what we're looking at. All right. That right there is what we're looking at. Okay, this is the time right now. This is where we expect it to go down to, and then down to there. This is the time frame that we have, and these are the targets that are highlighted by the tool. Okay, so all that information is there for you. All that information is there for you guys. Now, if this does move down to right here, I would bet, the whole idea behind this is that if it does this, you probably get a 20 to 30% gain in the option price. Okay, if it does do this, if it goes down to here, you probably have a 50% gain in the option price. And that's what I wanted to show you guys. And this is leading into next week's meeting. But I want to show you guys how to use this stuff so you can use it again and again and again to choose other ways to diversify. And in here, the maximum risk is going to be whatever the option costs. In this case right here, these are pretty expensive. To buy these options are pretty expensive. So you wouldn't want to do this one, probably. You wouldn't want to do a Netflix one. That's part of next week's stuff too. All right, so I'll get into that next week. But overall, if you could make 20 to 30%, day after day on a little bit like this, if that 20 to 30% is on $1,000, if you put $1,000 down for an option, and in 24 hours, you're going to either get 20, 30%, or you're going to just try to get your money back out of it. That's just another way that you can do this. Another way that you can do this. Now, Wayne's saying there's a big expected move due to earnings, and that could be up or it could be down. I don't know. But I'm just using the charts. I'm not using fundamental data at all. I'm just using the charts. And this is what you look at in the chart. Right? If earnings do come out and things change dramatically, the option price would go up, and the maximum that you're going to lose is what the option cost. All right? That's the maximum you're going to lose is what the option cost. And if that does happen, then, then you lost what you put into it. And it might be $100, it might be $200, it might be, in this case right here, it'd be $2,800. But but the chances of you making an easy $500, and that's what you were just talking about, Wayne. The chance of you making an easy $500 out of this, if you weren't doing it right on top of news, like earnings, and that's what this means right here. That's what that means is earnings. But if you aren't doing it right on top of earnings, then you know, then there's a chance you'd make a ton of money. And if the earnings come out bad, I don't think they're going to. I think it's probably going to go up. The earnings are probably going to be good, and it's probably going to go up. So, this is probably going to be completely moot at the end of it. But if the earnings are good, and it drops all the way down to here, you could have 50 to 100% gain in, by 9:35 tomorrow morning. And the post right now, the post is right here. The post has it going down 20 cents. So we'll see what it ends up. We'll see what it ends up being. But I just wanted to show you this. This is leading into next week's meeting. Okay, I know I ran over a little bit this time. So let me show you guys again. Let me see who's in here. I think everybody that's in here knows how to do all this. But if you haven't taken a free trial, let me go. Hang on, let me save this. And I'm going to stick it out in the Telegram channel. I'll show you where the Telegram channel is in a minute. Let me hit save on that. And if you don't have Telegram, just email support at support@targetviewtrades.com, and I'll get you the link to the. Hang on, I think I have the link to the Telegram channel, but this is the Telegram channel, and this has all the options that I picked this past week that I was going to show you today. I mean, this one's up 100%, this one's up 58%, this one's up 100%, this one's up something, I don't know, but they're all really good. And this happens day after day after day. You have opportunities like this all the time. All right, so let me just stick this one in here. And that was, it's going to be in downloads, the latest picture I did. This one right here. All right, and I'll just do from the meeting on it. That's, so right now, if you were to sell this option, let's say, I'm not selling, I mean, if you were to buy this option, if you were to buy the puts, and when you buy it, you can put a target on it. You can put a target on there that's like 50%. If you put that target on, and tomorrow morning, the market opens up and it's bad news, you're going to open up with the 50% gain on it, and be out of it. It'll be all done in like 5 minutes. You'll be all done. You won't even know. This happens again and again and again, and I like to do it at the end of the day, so you wake up to a nice surprise in the morning. Usually you can get it done in less than 24 hours, but that's it. All right, so let me just show you guys one more time. Get it in here so you can see it. If you haven't taken a free trial, go to tvtrades.com, tv-trades.com. Click on any of these things, like that or that, and in here you can see a bunch of things in here. The re-entry. This is something that I did. I've been doing this with Zacks Investments, or Zacks Advisories, whatever it is. I'm doing a thing with Zacks this past month. And if you take the Zacks picks and you can use them for options, you can use them as stocks that should be moving up or down in the near future, whatever their picks are. These are their 4 picks at the beginning of the year. And their 4 picks at the beginning of the year did really well. But if you got in at the beginning, or if you missed the trade at the beginning, these are all the places that the TV trade stuff says to re-enter. Okay, and these are some more pictures of different things that I didn't show you. Some more options that you could do in here. This one was up 150%. This one's up 37. This one's up 118. This one's up 58. I guess those are the ones that I was going to show you. But if you haven't taken the free trial, click on any one of these things that say to take the free trial in here. All right, that's at tvtrades.com. Sign up for the free trial there. All right, I'm going to end the meeting now, guys. I got a lot of stuff to do after this meeting, but thanks for the questions. Thanks for coming, everybody, and hopefully I got all your questions answered. And again, if you have any more questions, you can you can text me. Text me at 617-943-3298. Again, text me at 617-943-3298. I didn't even get into the other stuff like I was going to show you. Let me show you this. This in here, the snipe filter. Some of you guys know about that, but not everybody does. But anyway, that's enough, guys. Thank you all for coming. I'm gonna close this meeting down and get it out there on the website. Again, this meeting is going to be out here. If you go to targetviewtrades.com, the meeting is going to be right in here. Go to upcoming and past webinars. It's going to be Right here is where it's going to be. Next week's meeting will be right here. Okay. All right. Thank you all. I think it's been a pretty good meeting, even though I didn't get into the stuff I really wanted to get into. But I almost never do, it seems like. Thanks for coming, everybody. We'll see you.